This is the market capitalization of a company, and this number could be the difference between making a great investment in a particular company or a really bad one. Stay tuned as we uncover what the market capitalization is, how this number is calculated, and why this metric matters to investors. And if you stay until the end of the video, I'm going to share with you why this singular number could be the difference between you making a great investment decision or a bad one. The formula for market capitalization is simple. You take the shares outstanding of a company and multiply that by the current stock price. Now you may ask yourself, what are shares outstanding in the first place? And the answer is simple. Shares outstanding are basically how many pieces of a company ownership are there out there. So let's pretend that Apple stock was represented by this chart that we can see right here. As you can see, we have roughly 12 pieces of this pie, or as we like to say, 12 shares outstanding of the company. So if you were to own one of these pieces, you would get 1/12 of the entire company. Now the reality is that for companies is not that simple, because oftentimes they have millions of shares outstanding, but you get the concept, and that is that when you buy a share of a company, you're buying a very small percentage of that company, but you're still buying a percentage of that company nonetheless. So let's do this calculation for a real company. In this case, we have the financial statements for Apple, and specifically we're looking at the income statement. At the time that this income statement was filed, we can see the number of shares outstanding, which in this case is around 15 billion shares outstanding. As I said before, these companies have a lot of shares outstanding. But now let's say that Apple's stock price was currently $5. So if we wanted to calculate the market capitalization for Apple, all we would need to do is take 5 times the number of shares outstanding, and this will tell us exactly what the total value of the company would be. So we can see the number right here. Now obviously Apple stock price is not currently 5, but we can get the actual stock price like this. On Google Sheets and Excel, you can just simply use this formula that I'm showing you right now. Of course, you do need to have the Y Sheets add-on for this to happen, but once you have it, it's very simple. And the Y Sheets add-on, you can see it's right here. This is gonna tell us the current stock price of the company, and now that we have this, we simply have to substitute the 5 by the current stock price, and we can get the actual market capitalization of the company as of the number of shares reported in this period. The number of shares can change for a variety of different reasons, so make sure that you're using the right number of shares outstanding when you're performing this calculation. Now, why does the market capitalization matter in the first place? The reason why this number matters, and I'm going to show you how it is that you can get it automatically just in case you want to do it, is because depending on the market capitalization, you know how much a particular company is worth. So for example, if somebody was crazy enough and had enough money to be able to buy Apple, in technical terms, you would be able to buy all of the shares outstanding of the company for the low price of about $3 trillion. So if you had that much money in your bank account, you could technically purchase all the shares of the company and then own it for yourself. So this is one of the most valuable indicators to see how much a company is worth. And guess what? If a company is already worth a lot, is it possible that it can be worth a lot in the future? Well, the reality is that sometimes, depending on the types of companies that you invest in, the types of returns that you see are different. When you're a massive company like Apple, it becomes a lot harder to get to a number like 3 trillion, for example. But if it's a small company, like in this case, we have a smaller company, in technical terms, Salesforce, $218 billion company, it may be easier for the company to get to 300 billion in market capitalization than Apple getting to 4 trillion. But obviously we know how the stock market works, and it's not exactly that straightforward, but generally this is the way that it works. Now, it's not enough to just know what the market capitalization is in order to know whether you're overpaying or underpaying for a particular company. Generally, what investors do is have a whole bunch of different metrics that tell you whether or not a particular company is looking to be undervalued or overvalued, and these are calculations like the price to sales ratio, the P/E ratio, etc. So it is important to look at those, but the most important of all calculations is to do a valuation of the company. And there's many videos on YouTube that you can check out on this topic so that you can do it and find out for yourself whether or not a particular company is worth investing or not. As you just learned from this video, market cap is not just a number, but a number that indicates the stability of a company, the size of a company, the growth of a company, and most importantly, the valuation of a particular company. Armed with this knowledge, you're now more equipped to make great investment decisions for yourself and for those people that you most care about. If you've enjoyed this video, make sure to subscribe and turn on the notification zone so that way you get notified every time we release a new video like this that's gonna take your investing game to the next level.